Hello, this is Monica Sawyer. Welcome to Real Estate Investing for Women, where we focus on all aspects of real estate investing, including strategies, mindset, emotional mastery, money smarts, and so much more to ensure your success. If you'd like to learn my personal favorite investing strategy, just go to blissfulinvestor.com. You can also listen to this episode on the Real Estate Investing for Women podcast on iTunes. Now, let's welcome our guest.
Hello, ladies. Today, I am so excited to welcome to our show our guest, Bob Fraser. Bob is on a mission to help investors take advantage of one of the most effective and overlooked avenues of real estate investing: residential mortgage notes. As founder and principal of Aspen Funds, Bob has purchased more than 1,000 mortgage notes, earning double-digit annual returns without the risk and volatility of traditional investing options. Oh my gosh, Bob, this is going to be so good. Welcome to the show.
Great to be here with you guys.
Yay! So this topic is so hot. We did have someone else on the show talking about notes, and I got so many emails from my ladies that were like, give me more.
What
so
is
I'm
that?
so
Right.
Yay! So I'm so excited to have you here. So Bob, start by just telling us a little bit about your story and your history.
My story, I was a computer scientist, was a computer programmer for many moons, and then started a big tech company, ended up raising $44 million in venture capital and built a high flying tech company in the late 90s, and then got wiped out in the stock market crash there, lost everything. And so from that point, really started looking at different asset classes and got into real estate. And the idea was, let's try and avoid the kind of stock market volatility where in one day all of a sudden your nest egg is gone. Mm-hmm. And it's so funny because the traditional thinking is, oh, let's stay out of real estate's risky. Let's stay in the stock market where it's really liquid. Well, that's a problem when you have these kind of drawdowns. It's no fun to be in the stock market. Just seeing these 900-point crashes we've just had recently, and these kind of things. So I was looking for something a little bit different out of what I had been doing, and that's what led me into real estate.
Nice. And then how did you get into notes specifically?
Well, met my partner 8 years ago, and he's a real estate guy, and he lost everything in the 2008 crash. So we both were comparing our scars, and both had the same kind of scar in different places in different time frames. And he was in real estate and lost everything. And he said, the way to make money, the guys that are doing well in this space are the guys that are on the other side of the debt equation, rather than being a borrower, being a lender. And so he started doing all the research into that space, and we got started. I was really a finance guy and an operations guy, and at that point, and so I said, this is, he showed me the models that he'd come up with, and I was completely blown away. So this is too good to be true, and I said, let's try it. I let him invest my IRA for a little while, and I said, oh, holy smokes, we gotta jump into this. So started a little beta test fund with friends and family, and it's been off to the races. We've had 5 funds since then, and we've scaled, and really grown the business and taking care of our investors. So we got into it by realizing that the better place to be, is on the other side of debt, and it has a lot different characteristics than traditional real estate investing.
Tell us a little bit about that. What are the characteristics?
Well, so, first off, okay, so I actually, bought a little condo or a little duplex to rent out. And it was such a horrible experience. Now, I'm not, I'm a really good computer guy, and I'm really not a good hammer and nails guy, so I'll admit that up front, but it was a nightmare. And, with trying to keep a renter in there, and I had evictions, and then stuff broke. toilets didn't work. And I even hired a manager, and it was still a lot of work. And I said, I finally sold it, and I felt so good to be done with that. And meanwhile, my notes portfolio was just killing it. So, when's the last time you called your bank when your plumbing didn't work? And so that's us. We don't get phone calls. So here's the first thing is it's completely more, it's much more passive. It's much more hands off, the note space. And so it's much more scalable as well. I mean, you think about a bank that can own, hundreds of thousands of notes. And that's what, we own thousands and thousands of notes. And so it's much more scalable business. It's also, you have less volatility. So if you think about the housing price, going up and down over the years, but the debt piece is significantly cushioned from that. So, if you have, your house is worth, $300,000, but maybe you've only borrowed 200 on that. Well, so the house has to drop below 200,000 before me as a lender, I'm concerned. You follow me? So it's much safer. And it's mailbox money. I just get paid as the bank, people send me the money. So it's really nice like that, but I have very little maintenance costs, very, very little overhead costs. And so it's really far superior if you're looking for more passivity and more safety.
Mm. Do you have a team that does collections if people don't pay, or do you have a problem with that at all?
Yes. Well, of course, you have a lot of notes, you have people that don't pay, but we're the bank. So we have a lien on that house. So worst case scenario, we basically, begin, talking to that borrower, and in most cases, what we do is we hire a servicer, a loan servicer, that actually manages, all the statements, sending the statements, the 1098s, all the taxes, all that stuff. But we actually do have an in-house collections team to reach out to these borrowers.
Got it. It's so interesting. I've only had to go through one eviction ever in my my 25 years of being in the business.
Oh my gosh,
goodness.
You did it right. So
I know, right? And that's why I talk about teaching it, making it blissful, right? So, and I've had many, many properties. So, but I will say that collecting rent, and again, my tenants all pay early. My tenants give me a raise every year without me asking. So I've got things kind of set up.
You figured it out.
I know, it's sweet, right?
I didn't.
But every once in a while, I do need to collect rents, and it's not fun.
Yeah.
And you don't have a lot of leverage.
Yeah.
And so that, fortunately I've set up my system, so I'm not doing that very often. If somebody is late, I charge them a fee, and they usually pay almost immediately.
Yeah.
But anybody who doesn't pay immediately, it feels kind of yucky. And so that's one of the yucky pieces of the business, right?
Yeah.
And so it's interesting to address that even in the notes business, that you have to have a collections team and stuff like that.
Yeah.
And this is one of those things in every real estate business. This is one of those things that we have to deal with no matter what. You're not going to get away from it by going into a different strategy or a different strategy or a different strategy. So ladies, if you're trying to run from that piece, understand that it is not awesome. There are blissful ways to handle it. And one of Bob's choices is to hire a team. So he's not doing that piece. That's not fun for him. Yeah. So that's great. Thank you.
I will say the average default rate in the notes space is about 1%. I don't know what it is in rentals, but my guess is it's higher.
Yeah. No, so for me, it's probably about that, I would say, in my business. Not everybody runs their business the way I do. So that's kind of the value of sort of pursuing the blissful way, right? But yeah, but for me, I might have one late rent check every 3 years or something like that. I mean, it's really nothing. And like I said, I just send it and say, did you mail it? I didn't get it. Could you resend it? And it's done. So that's great. Good. But that's really, really good, valuable information. So you've said some of the benefits already of what blah, blah. You've already talked about some of the benefits to doing notes. Let's specifically talk about being a lien holder and some of those, some of the specifics that people can really look forward to by doing that.
Yeah, well, we talked about less maintenance, that kind of thing. We talked about the safety factor, so that you're not as worried about the downturns and those kind of things as much. Well, the other thing is that depending on the kind of notes you buy, you can buy them at a discount. So literally, this is a real note we own. It's a $100,000 little tiny $100,000 house in upstate New York. The guy owes us $100,000 on his loan. We only paid $50,000 for that note. So he doesn't know that. So he pays us, 600 and something dollars a month. It's a 7% interest rate that he's paying, which is a pretty good return. But because I only paid $50,000 for that note, my return is actually 14%. Does that make sense?
It does. That is exciting.
It's exciting, isn't it? Right. And then even more exciting is after I get paid my 14% return for a while, if he chooses to refinance or sell that house, I get paid off. And I don't get paid off $50,000. I get paid off $100,000. So I double my money. So, we don't always get a 50% discount on these loans, but we're buying loans, we're buying loans at 20% discounts quite often to 50% discounts. And so every time we get there's a refinance or a sale, we make money. It's a profit. So we earn, 13, 14% monthly until we earn a 50% gain or a double cap gain on that, all passively. And so it's crazy. We have about 8% of our portfolio that self-liquidates every year. So people sell or refinance their homes and we get paid off. It's awesome. So it's just this massive hunk of cash flow. Now if some people might think that's a pain, even though it's a profit, because now you have to go reinvest. You have to go find something else to buy. But because we're so active, we're always shopping and we're always finding these notes.
Nice. Wow. I love that. I'm glad I asked that question. I was like, had we already covered this? But thank you.
Yeah.
That's awesome.
It's awesome to think you can get a cap gain in a note.
That's
but
right.
You can. Yeah.
Right. That's really awesome. So tell us why Aspen Funds invest in real people, not just real estate.
Yeah. Well, we do buy these loans that, we buy defaulted loans as well, where people aren't paying and have been having trouble for a while. And we actually are able to modify those loans and wipe out a lot of debt for people. So we do everything we can to keep the borrowers in the homes, and only end up foreclosing about 2% of the time that a loan goes into default. So it's we feel really happy about that and able to help people stay in their homes. If they want to and they're trying, we can generally work with them to do that.
That's got to feel great. So in the extra portion of the show, we are going to be talking sort of about your economic analysis on what's going on in the market. But could you give us a really high level kind of an idea of where you're at around that and what we're going to be talking about later?
Sure. Yeah, I think we're going to go into really asset prices, specific asset classes, because the real estate market there's not one real estate market, there are many real estate markets. And I personally am seeing some real estate markets that are very attractively priced, and I see real estate markets that are very unattractively priced. And so we'll talk about that more in the extended portion of the show. But I want to talk about in this portion just the state of the housing market. And there is a lot of fear out there about the housing boom being over, and it's been so long. I mean, really, I think we bottomed in 2013, so it's been a long run. Most real estate investors are getting nervous. My personal view is that in the single family real estate market, we have more running room, quite a bit more, in fact. And it depends where you are. If you're on the coast, I think it's a little more challenging. But I think in the the bread and butter Midwest areas and Florida and other places, the prices have a long ways to run. And so what happened in the Great Recession, you saw housing starts roll off, almost go to very few. Multifamily starts also rolled off. They both went to zip. What happened since, though, in 2009, multifamily.
Well, let me interrupt really quickly, just for a quick second. For those of you that don't know what housing starts are, it's building. So the new homes that were coming on the market, just to clarify that.
So multifamily apartment complexes went on a tear and has recovered massively to where it was before the recession and even more. Mm-hmm. Single family homes have not. They have never recovered. So 15 years ago, you could buy a piece of land, build a house, sell that house, and make money. Today, you pretty much cannot do that. Why is that? It's the costs are too high relative to the price. Why? Because inflation has continued to run for 15 years, and housing prices have not kept up with inflation. So I actually have an economic deck that we can send to your listeners if they're interested as part of the show notes, that shows inflation adjusted housing prices are actually far below the peak in 2005 and 6. So housing prices, especially in the single family markets, are still have a lot of running room. Add to the fact that housing, housing is far more correlated to the jobs market than anything else. And with the jobs market hitting new records every day and low unemployment, it's a different animal. There's just more running because there's more demand. So there's a huge shortage of single family homes, and that shortage is systemic. It is actually baked into the system. Until we see more housing being built, you are not going to see that. And then one other little piece here, if you look at the unemployment rate hitting record lows, people may not be aware that Hispanic unemployment and Black unemployment is literally hitting record lows for 60-year records. So we're having even the minorities participating in kind of the gain. And so we're seeing the housing, especially in the lower end of the housing spectrum, doing super well. And there's just a lot of demand being created. People that have jobs, may end up wanting to buy a house. So a lot of reason for the housing market to run for a little while longer. And I have about 7 factors that kind of play into that, but all in there.
We'll talk about that in the extra portion of the show so people can really get a deep understanding of sort of what you're talking about. So, but that was a great high level. Thank you so much for that. It's interesting. Well, I've got all my opinions about that. We'll talk about it later. I'm really interested in that conversation. So that's great. So we're coming towards the end of this show. So could you start by just telling everybody how they can reach you, Bob?
Sure. You can go to our website. It's www.aspenfunds, funds.us, aspenfunds.us.
Great. And is that how they can contact you to get that economic deck?
Why don't we send it to you and you can put it in the show notes?
Okay, I will do that. So that's going to be in the show notes, ladies. So take a look, and you can definitely get that there. And so, just for clarification, Bob, do you run a fund, or do you teach people how to do notes, or both?
We run a fund. We do not teach people.
Okay, got it. That's really, really good clarity. So, ladies, if you're interested in the hands-off approach to investing in funds, Bob might be that person that can help you to do that.
Bliss approach.
The bliss approach, exactly. Thank you for that. The bliss approach. That's awesome. He handles all the yucky stuff and you just get the money. That's awesome.
That's right. You got it.
Yay. And he did mention that he started using his 401k. You ladies know that you can get a self-directed IRA. And now we know through Bob, you can start investing that IRA into notes and making huge returns, right?
Absolutely.
Perfect. Good. Okay. So, Bob, are you ready for our 3 rapid fire questions?
Okay, give me 1 second. Okay.
You good?
Yes.
Alrighty. So tell us one strategy or super tip on getting started in real estate investing.
It would be talk to the most successful real estate investor buy them a cup of coffee and pick their brain.
Mm, nice. And then what is one strategy on being successful in real estate investing?
Value-based purchasing. So buy based on we look at all pricing relative, like the price of the house relative to the equivalent rent, and so we price everything based on value. It's the Warren Buffett kind of investing model.
Nice. And what is one daily practice you do, Bob, that you would say contributes to your personal success?
Really, it's a kind of a weekly practice, but I dedicate 2 days a week at least to be alone in my office by myself. I really don't answer the phone. I really don't do anything else. I focus on just getting the things done that I need to get done. It allows me to be very, very productive. So segregating your time like that.
Nice. Ooh, nobody's actually said that on this show before. Thank you for that. So, Bob, this has been really informative. Thank you so much for what you've offered my audience so far. I'm really looking forward to what we're going to do next, but thank you.
It's so good to be here, and so fun to talk with all these awesome ladies who are out there making a difference and taking the bull by the horns. So well done.
Thank you. Thank you. Yes, I am very proud of my listeners. They are action takers. They're smart. They're ready to go. I just love them. So
I love that.
Thank you. And ladies, so stay tuned. We've got more in extra. We're going to be talking about specific economic details, what to do. The market has become volatile. There are good markets, there are bad markets, and Bob's going to be sharing a lot about markets. He's going to be sharing about asset classes, and talking to us about where we could invest and where we should stay away from. So I'm really looking forward to that in Extra. If you are subscribed to Extra, just stay tuned. You know that it will show up on your device right where this podcast is. If you're not subscribed but would like to be, go to realestateinvestingforwomenextra.com. I get a lot of questions about this. So ladies, just go to realestateinvestingforwomenextra.com and all the instructions will be there. You get 7 days for free, so you can test it out and see some of these episodes. And then you can subscribe if you like. And like I said, it will show up. The Extra podcast will show up on whatever device you're listening to this podcast on. So that'll be really awesome. Do that, realestateinvestingforwomenextra.com. For those of you who are leaving us now, thank you so much for joining Bob and I for this portion of the show. I look forward to seeing you next time. And until then, remember, goals without action are just dreams. So get out there, take action, and create the life your heart deeply desires. I'll see you next time. Bye.
I hope you enjoyed today's show. If you'd like to download my favorite investing strategy, just go to blissfulinvestor.com. See you next time.